How to create a forex watch list for beginners. Creating a forex watch list can be a helpful tool for beginners to track and monitor currency pairs in the foreign exchange market. Here's a step-by-step guide on how to create a forex watch list. 1. Choose a trading platform. Select a reliable forex trading platform that provides real-time price data, charting tools, and customizable watch list features. Popular platforms include MetaTrader, TradingView, and forex.com. 2. Identify currency pairs. Focus on major currency pairs initially, as they tend to have higher liquidity and tighter spreads. Common major currency pairs include your USD, GBP/USD, USD/JPY, and USD/CHF. You can also include a few minor or exotic currency pairs if you have an interest in specific regions or economies. The spreads will be very high though. 3. Perform fundamental analysis. Research and analyze the fundamental factors that affect currency pairs. Look for economic indicators, central bank policies, geopolitical events, and news releases that could impact the currencies you're interested in. Consider factors such as interest rates, GDP growth, employment data, and inflation. 4. Analyze technical factors. Utilize technical analysis tools to identify patterns, trends, and potential entry or exit points. Use charting features on your chosen platform to plot indicators such as moving averages, support and resistance levels, and trend lines. This analysis can help you assess the historical behavior and price movements of currency pairs. 5. Determine key levels. Identify key support and resistance levels on the charts for each currency pair in your watch list. These levels represent price areas where the currency has historically struggled to move above resistance or below support. Monitoring these levels can provide insights into potential reversals or breakout opportunities. 6. Set criteria and filters. Define specific criteria or filters to prioritize currency pairs based on your trading strategy or preferences. For example, you might filter pairs based on high volatility, strong trends, or specific technical patterns. This helps you focus on the most relevant pairs and avoid information overload. 7. Monitor economic calendar. Stay updated on upcoming economic events and data releases that could impact the currency pairs in your watch list. Use an economic calendar, available on most trading platforms and financial websites, to track important announcements like central bank meetings, employment reports, or inflation data. 8. Review and adjust. Regularly review and adjust your watch list based on changing market conditions, economic developments, or the performance of specific currency pairs. Remove pairs that no longer meet your criteria or show unfavorable price action, and consider adding new pairs that align with your trading strategy. 9. Track and record observations. Keep a trading journal to track your observations, notes, and any trades you execute based on your watch list. This helps you evaluate the effectiveness of your strategy over time and identify areas for improvement. Remember, creating a watch list is just the first step. It's important to continuously educate yourself, practice risk management, and gain experience to become a successful forex trader. For more details, watch my